Well, there's a look at what's happening to the price of gold, which has been enjoying a nice run this year as there's been that renewed conversation around interest rate cuts in the U.S. It's been one of the driving factors, although there's been some demand for gold, certainly out of Asia as well, which has been one of the driving forces. But since we're already talking about the road ahead for interest rates in Canada, we want to bring back Ed Devlin and David Rosenberg to talk a little bit more about the rate path ahead in both countries. Before we talk about the U.S., though, we were just talking about some very strong conviction both of you have on the need for the Bank of Canada to be aggressive with rate cuts going forward. The Canadian dollar, as we referenced earlier in the program, has steadily been losing ground against the U.S. currency because I think that narrative is alive and well in the market. The Bank of Canada has pivoted, and so we've seen that weakening in the Canadian dollar. How are you guys thinking about the loonies' performance from here? What goes into your analysis? Ed, I'll start with you.
Yeah, so we've been short and still short. So just as we talked about the need for the Bank of Canada to cut much more aggressively than the Fed, the Fed's will eventually start to get there too, but at a different pace and a different cycle. So the trend is your friend here, be short the Canadian dollar, and that's what we are.
And would you say one of the factors working against the loonie is that there are people like you who make decisions in the market who are also shorting the Canadian dollar against the greenback right now? Like, is that another consideration? Not just what we're seeing on paper, but that there are people actively betting against the loonie?
Yeah, I mean, people are always actively betting in the currency markets all the time. So, the real question is it a crowded trade? I think it might be a little bit crowded, but it has the fundamentals, in my humble opinion, always dominate. And the fundamentals are such that, the loonie looks like it's going to be down at least another, few percent, 5 or so.
David, what's your view on the loonie?
I agree with that. Decisively bearish, and we have been. And the Bank of Canada would ultimately will cut rates faster than the Fed. The Fed will cut rates, but the bank will cut rates deeper. On top of that, one of your charts you showed before was oil prices. It's not just oil. Commodity prices have gone back into an official correction, if not a bear market. And the most startling statistic overnight was the Chinese 10-year benchmark bond yield going down to a record low of 2.14% for the world's second largest economy and the biggest consumer of resources. So commodities are going into a bear market. The bank's going to be cutting rates more aggressively. And what has me concerned is post-November 5th, it doesn't matter who wins, Kamala Harris or Donald Trump, they're both going to be carrying out protectionist policies. I think Trump will be far worse for the Canadian dollar. But all roads lead to a weaker loonie ahead.
Now, when it comes to the U.S. rate cut strategy, as I was saying, that seemed to be one of the considerations behind gold's movement higher. David, I think last time you were with us, you were bullish on gold. Do you still think it benefits from this environment?
Yeah, we've been bullish on gold for several years. And I would say 100%. What are the two most important determinants of the gold price beyond global central bank buying is real interest rates, which will be coming down. That's bullish for gold. And look what gold's been doing with the U.S. dollar just range trading, because the markets have priced in the Fed, but the Fed hasn't even started doing anything yet. Once the Fed starts cutting, and that's why the Fed has dragged its heels, because they know what the markets are going to do once they start to cut. They're going to start pricing in a lot more. And that's going to lead to a weaker U.S. dollar. I just happen to think the Canadian dollar will weaken even more in a global currency setting than the U.S. dollar. But the U.S. dollar will be going into a bear market of its own. And gold is priced in U.S. dollars. Ergo, gold will continue to make new highs.
Okay. And then Ed is the fixed income guy, and you have, correct me if I'm wrong, but I think for the longest time, just same way you've been cautious on, what happens to the Canadian dollar, you have suggested there are some fixed income products that are relatively good bets because of where interest rates go from here. Can you remind our audience of what your positioning has been?
Sure. So first of all, I think broadly speaking, fixed income, this is the heyday for fixed income from, say, the last, 6 months or so, maybe for another couple of years, hard to say. And, I think fixed income, like just a conservative bond portfolio, can easily yield about 8-9%, for the next few years, right? So that's your starting point.
Because you get good yield and you think there's going to be price appreciation as interest rates come down.
Exactly. You get a current yield, plus you'll get some capital gains along the way as rates get cut. So the total return will add up to, call it maybe 6% in yield, 3% in capital gains, you're getting kind of to 9, 8, 9 over the next few years will be great. And then guess what? The party will be largely over after that's done. Right now, specifically, I think you should also position for the yield curve has been uninverting, steepening, and it should become positively sloped normal. So the front end of the yield curve is a great place to be. Right now, Canada is a great place to be. U.S. is good. And you should be careful about your rotation. So rotate out of Canada into the U.S. is kind of what we're doing. And in U.S., agency mortgages, AAA rated asset, 5.5%. Great safe asset.
I have to put the squeeze on you. We don't have a lot of time, but we didn't talk about Bitcoin, and everybody's constantly talking about Bitcoin. And a lot of times people who are bullish on Bitcoin also talk about things about where the U.S. dollar fits into the equation over the long term. And you just said that you think overall you're somewhat bearish on the U.S. dollar, or I think that's what you said. How do you feel about Bitcoin as an asset class and how it fits into this conversation right now?
Well, I don't own Bitcoin, and I have no plans to buy Bitcoin. It's basically gold on steroids, but I tend to be more of a conservative investor, and I don't want to introduce more volatility into my portfolio than is necessary. So call me agnostic. I guess you'd say that's an upgrade because I haven't liked crypto, but it's certainly been a great quotes investment for the past number of years. But I'm not a buyer, I'm not a seller. I understand gold. I understand the gold market a lot better, so I'll stick with what works and the relationships. There's no guesswork and speculation involved with gold, but there is a lot more of that with Bitcoin.
Ed, do you dabble in crypto or you just stay in the bond market?
Uninvestable, in my opinion. But that's on a fundamental basis. If you look at just if you look at if Trump wins and he's been courting the 70 million Americans that own a crypto asset, and it can go to anything. I just don't think it's got any kind of real store of value. So I think it's uninvestable. I'm happy to watch from the sidelines. People can make and lose fortunes, but not me.
There's only one currency to really go long of right now, okay? The Japanese yen. And the renewed bull market in the yen has just gotten going to a little fanfare just in the past couple of weeks.